And farm to table, well, that's just supper. And whether it's a raised garden bed, acres of land, or something for your animals, we've got all the supplies and are happy to share a little know-how.
Welcome to Tractor Supply, into life out here.
When I started Walton Goggins Goggle Glasses, I needed a website. And GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins while they're shopping for Goggins for their noggins.
Food is Gina's passion, but diabetes threatened to take that all away. With Dexcom G7, Gina learned how different foods affect your sugar levels in real time, so she doesn't have to choose between the foods that she loves and her health.
Decking and railing that's ready for anything you throw at it, even John's 40th. Trex, performance engineered for your life outdoors.
CNBC Podcasts. All your shows on the go. The latest market news and analysis. Ready when you are. Don't miss out. Listen to CNBC wherever you get your podcasts. And now the answer to today's Aflac trivia question. Who was the first Major League Baseball player to strike out 3,000 batters? The answer? Walter Johnson.
A new report saying Sarepta would need to conduct new studies in order to show the FDA that its muscular dystrophy drug Elevidys is safe. And just this morning, EU regulators not recommending approval of that treatment. As a result, that stock is down another 13%. Joining us right now on that and what to expect from the other biotech names reporting next week is Salveen Richter, lead biotech analyst at Goldman Sachs. And Salveen, let's go ahead and start with the news of the day since it's out with Sarepta. Just digging through this is a stock that is now down 92% year to date. What happened here? Is there hope for a turnaround? And this is a big deal. You now have 3 people who have died, non-ambulatory people who had this disease versus the ambulatory people. But how do you look at it as an analyst?
So it's really unfortunate for the company and for patients. Essentially, they have a gene therapy drug for Duchenne muscular dystrophy, which is a disease where these patients progress to the point of not being able to walk. And what's happened here is they've had very advanced patients react to the drug and end up with liver disease or acute liver toxicity, which has resulted in deaths. And so at this point, we've had 3 deaths. And there's really 3 things that need to play out here. One is the company needs to work with the FDA to determine if there's a way to mitigate this risk. And so they are thinking of how they could include another immunosuppressant on top of the steroid regimen. So they need to agree upon what that trial needs to look like. The second concern is they do have debt, and they also have revolving credit that they need access to, or they need to be able to fund based on a revenue level. And then third, they just have to solve for growth on the forward here, because they can't just be predominantly focused on this gene therapy revenue stream, of which they have some risk with their portfolio next year. So
what's the risk with the portfolio next year?
So they have 3 drugs on the market for Duchenne that use a different mechanism, and all 3 of them will have confirmatory trials. And so there is the possibility that if these don't work, that their drug could be pulled off the market.
Wow. There are questions about what this means for gene therapy writ large. It's shown an awful lot of promise. There are lots of rare diseases that people have hopes that this could eventually cure. But big headlines like this and a crackdown from the FDA raise concerns about what it means just for innovation in the industry writ large.
I think innovation will continue. The big question here is, how do you optimize? We're talking about generation 1, so how do we get to generation 2 and 3 and make it safer? It hasn't just been safety. There's a payer question with regard to paying for these high-priced drugs that are one-time potential cures. And so there is read-through from Sarepta to some other companies, but there's also cases that are very different. So I think we're just going to have to look at this on a case-by-case basis.
Okay, why don't we talk about what to anticipate out of biotech for the earnings season coming up? You have a number of stocks that you have a buy rating on: Biogen, Amgen, Regeneron, and Vertex. What do you expect from the stocks that you think have a pretty good positioning right now?
Yeah, I mean, we've had quite a few years here of negative earnings revision cycles for healthcare and for biotech. And so what we want to see, is numbers, right? That they're achieving these numbers. We've started to have some stability. 2Q tends to be a stronger quarter. And so when we look at some of these names like Amgen, for instance, or even Alnylam, which will transition to a profitable large cap this year, we think they're positioned really well to put up good numbers. That said, the street's also positioned in these names and they've moved into the quarters. So I think they have to put up these good numbers. But we're also very much going to look at two other factors. One is launches. There have been quite a few drug launches that have played out this year, including HIV for Gilead, that we're going to be watching, and then pipelines beyond numbers. And so Alzheimer's disease is starting to be a focus for the second half again, as is pain, as you look at a company like Vertex.
What about Gilead? You've actually got a neutral rating on that, despite the HIV drug that they got approval on this. Why is that?
So for Gilead, they do have loss of exclusivity for their HIV portfolio when you look to the next decade. And so for us, it's a question of whether we can see that offset within their internal programs right now. But the focus very much is going to be the execution on the recent approval of their HIV PrEP drug.
Yeah.
And then I think second and third, we're going to be looking at the exposure of Medicaid for any of the changes that have played out or for any drug pricing aspects that could play out there. And then, as I mentioned, just the pipeline and additional growth levers outside.
I mean, the stock is up almost 50% over the last year, too.
It is.
So you're looking at a stock that has seen a run. When it comes to Moderna, what are your thoughts? You've got a neutral rating, I think, on that as well.
Yeah, Moderna has some pull and puts. So at this point, I mean, it was a difficult name in the context of mRNA and COVID and all the regulation that was coming down on it. What we need to understand now is that they can make numbers, and then also that their pipeline starts to work outside of respiratory
You're talking
viruses.
about cancer and some of the
Order
things that
canceled.
they've been working on to try and have, you know, I don't know if you can have a vaccine for cancer, but that's
Order
kind of
filled.
Order filled.
Yeah.
The cancer vaccine.
Order
is key.
submitted.
Okay. Salveen, thank you. We appreciate your
you.
time.
Thank you so much.
Okay, coming up, efforts on Capitol Hill to get employees more equity in the companies that they work for. New York Congressman Tom Suzik is going to be here to tell us about the Share Plan Act and how both workers and corporations could benefit. He joins us at 8:10 Eastern Time. Squawk Box returns in a moment.
Order canceled.
Last year, we helped small business owners fall asleep. This
Order
year,
submitted.
we're waking them up. Morning, people. Feels good to finally connect with y'all. Meet the world's first AI alarm clock, Craig AI, or as I like to call him, Craig.
Craig, is this magic?
It's not magic, just AT&T Business's fast, reliable internet.
Right. Superhero.
Don't worry about saying it.
Oh, so you corporate types are rock stars?
Well, that's as ridiculous as rock stars being corporate types.
Workday's AI agents are making you all rock stars.
Sorry, habit. Proceed.
So that's a slide. Any questions?
And now with Workday, we can manage our people and AI agents. I'm sorry. Who are they?
Oh, interns.
We're interns.
Good night!
I'll see you tomorrow.
Order submitted.
Wednesday, August 6th, join CNBC's virtual small business playbook event, Real World Insights, on navigating volatility and seizing opportunity. Register now at cnbcevents.com/smallbiz.
Feel more you than ever, without compromise. At TJ Maxx, you can afford to turn your closet into a place of endless expression. With the quality you deserve, styles you crave, and prices you love. Max, what makes you, you.
What's your flavor?
Tell me what's your flavor?
Here's a taste of H-E-B Creamy Creations Mexican Hot Chocolate. One of over 40 unique ice cream flavors created to satisfy Texans' cravings.
Tell me what's your flavor?
Kraft mac and cheese.
Get 'em up, get 'em up.
The one and only.
Sectornomics has officially returned. We want to get over to Dom Chu to find out what he is focused on this morning. What you got?
All right, how about the sectornomics and materials for our sector this month, Andrew? The sector ranks in just about the middle of the pack in terms of the 11 sectors for the 7 months into 2025. It's just up roughly about 8% or so. The miners are leading the charge so far for the sector. Newmont shares are up more than 60% given that rise in gold prices. Freeport-McMoRan also in the top 5 as well. If you take a look at some of the other names that we're focused a little bit more on, Mosaic ranks second. That company specializes in phosphate and potash used to help fertilize crops. Another ag company is in the third best spot, and that is Corteva, which is up about 28% in 2025. Steel company Nucor also doing well so far this year. Those shares are up 21%. Meanwhile, at the bottom of the material stack are 3 big chemical companies: Eastman Chemical, Dow, and LyondellBasell. Paper and packaging companies Smurfit Westrock and Albemarle are also on the short side of the sector as well. 2 of the major issues for the sector so far this year have been the dollar value and tariffs. In the last 3 months, since tariffs have become more of a focus for this market, every single stock in the sector is up. Now, part of the reason is the dollar's value and its fall, offsetting some of those tariff angst and issues there. The falling dollar makes American exports more affordable outside of the U.S. Newmont is seen as a big beneficiary. All of the company's revenue is pretty much outside of the country. DuPont, also a big exporter, 67% of its revenue is from outside the U.S., and that stock is up 14% over the course of the last 3 months. DuPont makes materials for the global semiconductor industry, which has been a key area of growth for the company overall. The electronics part of the business brought in almost half of the revenue last year. Mosaic, meanwhile, gets about 65% of its revenue from overseas. Brazil, the main destination for those products. Most shares of Mosaic are up about 28% over the course of the last 3 months as well. So as we talk about the materials sector, Becky, we don't focus a lot on some of those things given the size of the sector, but a lot of the storylines that have been coming out lately, including gold and some of those tariff impacts, have been in materials. I'll send things back over to you.
Yeah, and we're definitely going to continue to follow those storylines as we see more of the impact of tariffs, kind of follow this out, see where things stand on all of it. Dom, thank you. Sure. We will check in with you in just a little bit. When we come back, though, energy company Phillips 66 just releasing quarterly results. The CEO, Mark Lasher, will break down the report and give us an update on what's happening with oil and gas demand, what's happening in the refinery business. Right now, though, as we head to a break, check out some of the other players in the energy sector this morning. Shares are relatively flat. Valero has been another one that has benefited from some of the very same things that we're going to talk about with Phillips 66 when we return. We'll be right back.
Sectornomics is sponsored by Sector Spider ETFs.
At Morgan Stanley, old school hard work meets bold new thinking to help you see untapped possibilities and relentlessly work with you to make them real.
What if you could invest in a future where skin cancer treatment is non-invasive and relatively painless? Medicus Pharma's groundbreaking solution delivers chemotherapy directly to the tumor site, offering a mostly painless alternative to invasive surgeries. With the skin cancer treatment market expected to exceed $20 billion by 2030, Medicus is poised to meet the demand for cost-effective, non-surgical options. Now advancing Phase 2 studies. Medicus Pharma, leading the charge in skin cancer innovation.
See, I made this one crooked.
This moment, story time for Sarah. It means everything to them and to all of us. At Evernorth, we make complex care journeys
Connection
simpler
lost.
with comprehensive coordinated care for better patient outcomes. Now, Sarah's grandma doesn't spend all day at the infusion center. She gets her treatment at home with Evernorth's specialty pharmacy, Accredo. So Sarah never misses story time. Evernorth Specialty Services, because every moment counts.
At AG1, our customers deserve the best, and the best just got much better. AG1 Next Gen has launched with upgraded B vitamins and probiotic blends backed by gold standard clinical trials. It's time for the next generation of AG1.
Out here, there's always plenty of loyal followers. And whether it's your first new chicks or a farm full, we've got all the supplies and know-how you'll need.
Welcome to Tractor Supply and to life out here.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
All right, welcome back, everybody. Phillips 66 out with results this morning. The company earning $2.38 a share. That included $239 million of pre-tax accelerated depreciation on its Los Angeles refinery. Revenue coming in at $33.5 billion, beating expectations, and the company saying that refining actually ran at the highest utilization since 2018, achieving its lowest cost per barrel since 2021. Joining us right now is Mark Lasher. He is the chairman and CEO of Phillips 66. And Mark, thanks a lot for being with us this morning. We see the stock is up by about 0.7% this morning on this news, but it is a pretty big turnaround. What you've seen in terms of that realized margin per barrel up by about 12.4%. What happened?
Hey, Becky, thanks for having me here this morning. It's great to be able to talk about the strong results our team delivered in the second quarter. And you think about it, it's really across the board in our major segments. It's really demonstrating the strength of our integrated strategy and our disciplined execution. It all starts with safe, reliable operations. You see that showing up in our metrics. Let's start with refining. We delivered $392 million in adjusted pre-tax income, and that was supported by those high utilization rates you mentioned. We had our highest utilization rates that we've seen since 2018. We've been focused on cost reduction, and we've lowered our cost per barrel, and we saw the lowest cost per barrel in the second quarter, the lowest we've seen since 2021. Market capture, we maxed out market capture, and we had, first half of this year, we've had our record yield in clean products. So we're putting more crude through our refineries, and we're getting cleaner, higher value products through our refineries every day. And that's been a long journey, and we're delivering those results. Midstream showed up really well this quarter, too. When you look at midstream, we delivered $731 million of adjusted pre-tax earnings. Those earnings were buoyed up by an acquisition that we completed earlier this year, and we also brought on another gas processing plant out in the Permian Basin. And both those things really contribute to our wellhead to market strategy in the midstream business, and it opens up frontiers for more organic growth in our midstream business. So we really like that business. It's delivering results. Then you look at our marketing and specialties business. They went out capturing the higher margins that are out there, delivering higher volumes to the business, and brought home $660 million of pre-tax and net income. Our marketing guys like that 66 number, I guess, so they delivered $660 million worth of value. So the team is more focused than ever on delivering value. We're providing energy, we're improving lives, and we're delivering shareholder value.
Mark, let's talk a little bit about the board fight that took place in May. I mean, this was a big deal that you had with an activist investor. They won, Elliott won 2 seats on the board. You won 2 seats on the board. So how is that playing out? Have you all found any kind of common ground areas that you agree with, and what's the game plan from here?
Yeah, it was a big contest. I will tell you where we're aligned is we know that there's more value to create from the great assets that we have. We're all aligned on creating more shareholder value, maximizing the value of our assets, and we really believe in our integrated structure, our integrated value proposition, and we're going to deliver against that. We added 3 board members, 3 new board members to our board. 2 of them were nominated by Elliott. 2 of them were nominated by us. And they're all great board members. We take our board members, our new board members, through an onboarding process where they get a deep dive in all the materials that they need to understand, all the data they need to understand to drive the value and really challenge us around our strategy each and every day. And they've been onboarded. We've been through a board meeting already. They're well integrated. They're being, they're right there at the table with the rest of our very talented board. I mean, we've got board members that are retired chairmen, CEOs, retired general counsels. We've got representatives that spend a lot of time on Wall Street across the board, and they know that their job is to represent all of our shareholders and focus management on delivering maximum shareholder value for the long term. And they're all aligned, and they're all at the table having those conversations.
Okay, aligned and having those conversations. You said everybody can agree that you can create more shareholder value here. Do the Elliott board members agree how you go about doing that, or is that the big part of the discussion right now?
Well, I would correct one thing. They're Phillips 66 board members now, and so once they're onboarded, their fiduciary responsibility is to all of the shareholders, and they are. They're at the table. They bring a diverse perspective, and those perspectives were out on the table and in the discussion. And we go through a process to examine our strategy almost continuously. We don't just lock and load on one thing. We make sure that something hasn't changed in the macro that could undermine our strategy. And then every fall, we go into a deep dive on our strategy where all the options are on the table. Our board members hold management's feet to the fire. There's no sacred cows, and we deliver on the strategy, and we focus on how to maximize shareholder value over the long term. And I believe these members will contribute to that conversation constructively.
You all made a big announcement last year, Mark, just talking about how you're going to be winding down the facility in Los Angeles, your refinery there. What happened around that? Is California just a place that's too tough to do business? I mean, I think about Chevron actually moving its headquarters to Texas from California and some of the struggles they went through. Kind of wondering what happens to the state if they chase out some of the businesses there.
Becky, we go through a process looking at the viability of all of our assets, whether those assets should be in somebody else's hands or whether those assets aren't generating the value that we need to see. And that was the case with our LA refinery. It's a very old facility. Frankly, it's 2 old facilities that were combined over the years, about 5 miles apart. There were challenging inefficiencies there. And we were at the point where we were going to have to recapitalize that asset, and we just didn't see the path forward for profitability. So we made the very tough decision to cease operations. And in California, you're required to give about a year's advance notice, and we did that. And the process is underway to cease operations and to redevelop that property. We've got 650 acres right on the port of LA. The California administration has been very supportive, primarily because we've also laid out a plan to resupply the refined products that will go away. We already did this in Northern California when we converted our Rodeo facility from crude oil to renewable feedstocks. And so we've got the proven ability to bring in feedstocks from outside California, whether it's from our Ferndale refinery in Washington or international markets. We've got the ability to resupply the California market and meet their needs.
But it was a question of not wanting to recapitalize or put more money into the plant because business conditions make it too tough to be profitable in a state like California?
That refinery was our highest cost refinery in our portfolio and wasn't contributing meaningfully to our earnings. And so it was a decision that we had to make.
Okay. Mark, I want to thank you for being with us. And by the way, the stock is now up by 2.3%. Again, on better than expected earnings, and we appreciate your time this morning.
Thanks for your time, Becky. I appreciate being here.
Thank you.
Okay. Coming up, President Trump and Fed Chairman Powell donning hard hats to tour the central bank's renovations. They might have been wearing hard hats also because it got a little incoming. Got a little awkward at the minimum. An awkward exchange, maybe that's the polite way to put it, over the price tag of the project at one point. OMB Director Russ Vought says that Powell has grossly mismanaged the Fed. He's going to join us at 8:40 Eastern Time. Squawk Box coming right back.
You stand at the forefront of building materials.
Today, Amrize becomes the partner of choice for the professional builder of North America with our advanced granite solutions from foundation to rooftop.
For adults with obesity, Zepbound means change.
It's changing what I believe is possible when it comes to weight loss.
Order filled.
Zepbound helps adults with obesity
Order
lose
submitted.
weight and keep it off.
Don't take if allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Tell your doctor if you get a lump or swelling in your neck. Stop Zepbound and call your doctor if you have severe stomach pain or a serious allergic reaction. Severe side effects may include inflamed pancreas or gallbladder problems. Tell your doctor if you experience vision changes, depression, or suicidal thoughts before scheduled procedures with anesthesia. If you're nursing, pregnant, plan to be, or taking birth control pills, taking Zepbound with a sulfonylurea or insulin may cause low blood sugar. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and worsen kidney problems.
Ask your healthcare provider about Zepbound. Explore savings options today.
It's about political points.
The people I see, they just need a little help.
Workout wear is my only wear. I tell people I'm going to the gym, but
Order filled.
Order filled. Order filled.
Tell me what shirt goes with what pants.
I don't know what else to wear. What they don't know is most of the time the solution is easy. Stitch Fix. We're not
Order submitted.
Order rejected.
Find your match with Stitch Fix. Online personal styling
Order
for your
submitted.
size, style, and budget.
oh wow.
I look good.
It actually makes my job really easy. Stitch Fix.
We're here for our convertible.
How about
Order filled.
Want to get out of here? Hier ist das Schiebedach.
Und hier ist die Sonnencreme.
Okay, let's move on.
Where are those trucks?
We're right here.
Whatever it is, we're here for it.
Yep, still here.
Coming up, the FCC giving the green light to the Skydance Paramount merger. We're going to check out what is next in this media drama when Squawk Box returns after this.
I can't wait to see their faces when we come out.
What seems to be the problem, soldier?
The belly's full of Greeks.
Sneaky cowards.
Innovation changes everything.
Send it back!
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing carefully, read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
As a business owner, I've got a lot on my plate. That's why I use ZipRecruiter to hire. ZipRecruiter has this feature called Zip Intro. I chose the time, and it did all of the work of finding and scheduling the candidates for me. I just picked my top choices and talked to great people the very next day. The plan was to hire 2 people, but the candidate quality was so good, I wound up hiring 4 in a week.
Zip Intro. Post jobs today. Talk to qualified candidates tomorrow. Try it free only at ZipRecruiter.com/CNBC.
This place ain't big enough for the three of us.
Looks like y'all got a case of the zoomies.
Reba.
Have y'all seen the Real View maps on Realtor.com? You can easily compare homes by lot size. Who wants to find their dream house? Realtor.com.
Out here, there's always plenty of loyal followers. And whether it's your first new chicks or a farm full, we've got all the supplies and know-how you'll need.
Welcome to Tractor Supply and to life out here.
I wish my TV provider let me choose what I pay for.
Sling lets you do that.
I like the sound of that. I wish my TV provider let me pause my subscription when I want.
Sling lets you do that.
Order filled. Order filled.
Let me have hundreds of free channels.
Sling lets you do that too, fellow siren.
Choose and customize your channel lineup or pause and watch for free. Sling lets you do that. Base package required.
When I started Walton Goggins Goggle Glasses, I had no idea what I was doing. But GoDaddy Aero does, using AI to build a logo, website, and social content. So I can let the world know if your goggles ain't Goggins, they don't belong on your noggins.
Decking and railing that stands up to whatever you ask and bends to your every whim. Trex, performance engineered for your life outdoors.
Welcome back to Squawk. The FCC approving Paramount's $8 billion merger with Skydance Media. Joining us right now is Matt Bellany. He's Puck's founding partner. The deal looks like it's in the books, Matt. And so the question really, we can go back and litigate everything that's happened, but what comes next? What are the sort of the first pieces of things that you think we're going to start to see as a result of all this?
Yeah, can you believe we're still talking about this deal? It hasn't closed yet. I think what we're going to see is a pretty dramatic move by Skydance. Once this deal closes, could be August 7th, could be August 12th, if everything goes well, we're going to see some pretty significant moves, whether that means a move to sell off the cable networks of Paramount Global, whether that means dramatic cost cutting. It could be the merger of Paramount Plus and Pluto, their free streamer. It could be some new deals. I reported in my Puck newsletter last night, they're doing a big film deal with Will Smith, so he'll make movies for the Paramount studio. There's going to be a lot of very quick moves, I think, to kind of establish, because they've had a year to sit on this plan.
What about cuts? I think one of the big things that people have been fascinated by, obviously, in the last week has been the whole Colbert situation, but it raises the prospect that other parts of the business may get cut as well.
Yeah, I mean, Skydance has promised about $2 billion in cuts when this merger closes. So we're going to see both employee cuts and I think content cuts. CBS in particular has a lot of scripted programming that I think could be on the chopping block. NBC and ABC don't program as much scripted content as CBS does. And I think we're going to start to see CBS managed more like a legacy declining asset. And that will mean less content, less original content on CBS. They also have to make cuts so they can start spending a little bit on Paramount Plus. Cindy Holland, who's coming in to run Paramount Plus, she has a plan for the kinds of shows she wants to make. We don't know if that includes all the Taylor Sheridan shows, which have been powering Paramount Plus. There could be some cuts to the Taylor Sheridan universe on Paramount Plus. We don't know exactly how they plan to play that, but everything I'm hearing is that they want to make shows for less money, more inexpensive stuff, and Taylor Sheridan's shows are very expensive.
Right. What happens to the folks who have been critical of the president and others? I'm thinking about not just the Colbert of it all, but, you know, literally just this week, you had this South Park deal take place, and then the first episode of South Park is this, I mean, I don't even know if we can talk about it on TV, Matt, just exactly what we saw. I mean, it was on cable TV, so maybe we can, so I'll let you do that. But that, plus maybe even some of the things that Jon Stewart was saying, Comedy Central, also an asset of Paramount now, just where all of that goes.
Well, I know you have watched Billions, so I think you can take it when we talk about this subject. But the Trump stuff on this week's South Park was extremely outrageous. He was naked. There was talking genitals. There was all sorts of things. And Sherry Redstone had the decision to make to run that or not run that with the FCC approval pending, and she allowed her CEOs to go ahead and air that as they wanted to air it. And I think that that was a pretty interesting decision, and it shows that I think ultimately they recognize they are a content company and they have to make and air the content they want. But Colbert, I think that was an economic mostly decision to get rid of that show because it was losing money. The next decision to make will be The Daily Show, because I am told The Daily Show is also not a huge money maker. And would they pull the plug on The Daily Show? If they do that, I think all fingers are going to start pointing at them and say, well, wait a second, is this economics, or are you silencing Trump critics in order to curry favor with the White House? They got over the FCC hurdle, but it doesn't mean Trump is going to go away or stop paying attention. He clearly
Connection
is.
lost.
And things like, I think The Daily Show will be a big indicator of how they they look at this and how they're operating, because they could get rid of it.
Matt, your colleague Dylan Byers has been writing a lot about the prospect of Skydance, or the new Paramount, or CBS, I should say, buying Barry Weiss's Free Press. And I'm curious where you land on that prospect.
Well, they're certainly negotiating with her. She has put a pretty hefty valuation. Financial Times reported $200 to $250 million on a business that has a lot of subscribers, but is still a Substack-based newsletter business primarily. Good for Puck if they sell that at that price. But I think David Ellison wants Barry Weiss. He wants someone in at CBS News who could be kind of a content consultant. She is a center-right commentator, kind of reactionary, more anti-woke than anything. And he thinks that that will both send a message to viewers and potentially to critics on the Republican side that CBS News is in different hands now. They're also talking to David Rhodes to come in and run CBS News, I reported. We'll see if that deal works out. They would like him to come in. He not only has experience at CBS News, but he once worked at Fox News for a long time. And they think that that will send the signal that CBS News may not have the quote-unquote bias issues that the Trump administration has been complaining about.
So $200 million, is that a fair price for the signal?
For the Free Press, you mean?
Yeah. And would he be willing to pay $200 million for what you're describing as sending a signal?
My understanding is that they are negotiating. Typically, these figures you see out in the press are maybe wishful thinking, something that she would like to have happen. One source associated with David Ellison told me that there is no way they are paying that price, but obviously there is an active negotiation going on here. So both sides have an incentive to put competing numbers out there. We'll see. Good for Barry Weiss if she can sell her media outlet for that price or anything close to that. In this media market, that would be surprising, a welcome surprise.
It would be a welcome surprise. It would be great for Barry, who I've known for a very, very long time. Matt, thank you. Appreciate you joining us this morning and giving us your insights on all this. And we should say that FCC Chairman Brendan Carr is going to be joining the gang on Squawk on the Street a little later this morning, and I imagine taking questions about all the things that we just discussed.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin. Among our top stories this morning, President Trump making a rare visit to the Federal Reserve to tour the building's renovation and renew his pressure on Jay Powell. The president remarking on the exorbitant cost of the ongoing project to reporters. Powell shaking his head at times in disagreement. The cost of ongoing renovations has become the subject of Republican scrutiny, as well as lowering interest rates at the Fed, too. We're going to be speaking to OMB Director Russ Vought about the meeting and tensions with the Fed later this hour. And the United States and China will hold their next round of trade talks on Monday and Tuesday in Stockholm, Sweden, roughly 6 weeks after their last meeting in London. The 90-day tariff truce between Beijing and Washington is set to expire on August 12th. Earlier this week, Treasury Secretary Scott Bessent said that deadline could be extended. President Trump also saying that he could meet with Chinese leader Xi Jinping in the not-too-distant future with some reports suggesting one option would be on the sidelines of the APEC summit that comes in October. Bloomberg is reporting Google has secured a $1.2 billion deal with ServiceNow. Google will provide the software company with cloud computing services under that agreement. The apparent deal comes as Alphabet's quarterly results this week got a big lift from its cloud unit. All right, let's check on the futures this morning. So far, you're looking at the Dow up by about 41 points, and the S&P, which has hit a new record every day this week, is indicated up another 6.6 points this morning. Nasdaq's lower, but just barely, 3 points here. If you check out what's been happening with the Treasury market, you'll see that the yield's a little lower on the 2-year this morning at this point. It was flat earlier. Now it's at 392. The 10-year is flat at 440. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. Dom, what's on the move now?
All right, so what's on the move, Becky, Andrew? Our shares of Intel sinking more than 7% despite a beat for its profits and revenues for the quarter. The company announced significant cuts in its chip factory construction, including scrapping previously planned projects in Europe and slowing construction of a plant in Ohio. The new CEO, Lip Bhutan, said that Intel completed the majority of its 15% workforce reduction and said the first few months of his tenure, quote unquote, had not been easy. That stock is up so far this year here, just about 4.5%. But if you go back a little further for some context and color around this, those shares are still down about 60% over the course of the past 5 years. That's a stark contrast to shares of competitor AMD, which are higher by more than 130% over that same period. So the divergence, we're not even putting Intel up here, but just AMD and Intel, an interesting divergence there. Meanwhile, turning to shares of Procter & Gamble, lower just by about 2/3 of 1% at this point, on a downgrade to neutral from overweight over at JP Morgan. Analysts there expect a cautious consumer environment to lead to another quarter of lackluster growth for the maker of products like Bounty paper towels, also Gillette razors as well. The company reports results on Tuesday. And we're going to finish with a check on shares of Ulta Beauty, lower by just about 1.5% on a downgrade to hold from buy over at Loop Capital Markets. Analysts there are concerned about valuations, with the stock up more than 15% so far this year. So Ulta Beauty in focus as well. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers, as always, can get all the access to detail and analysis behind those big upgrades, Becky, and downgrades. I'll send things back over to you.
Okay, Dom, we'll see you in just a little bit.
Coming up, a bill to incentivize companies to distribute 5% of their stock to the lowest paid 80% of their employees in an effort to build the middle class. We've got a congressman here to explain this plan and what it means after this. And then later, President Trump visiting the Federal Reserve headquarters. OMB Director
Order submitted.
Russ Vought joins us to discuss that meeting and so much more. We're coming right back.
Seabits. Your company started in the kitchen.
Hello?
Now it has 3. Your team of 5 grew to an army of 500. And that's your logo, right there in marble.
That's big.
To grow your business from big to bigger, you need an advisor built for the middle market.
Our data shows that this deal works.
Interesting. Very interesting.
Accounting, advisory, insurance, and more. Seabits. Insights that impact.
Investing. You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. You're not a child playing a game. This is grown-up business. The real thing. You know wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Out here, there's always plenty of loyal followers. And whether it's your first new chicks or a farm full, we've got all the supplies and know-how you'll need.
Welcome to Tractor Supply and to life out here.
Welcome to CNBC Plus. Market destination?
CNBC Plus. On-the-go access to global market data, news, and analysis as it happens. Start streaming at cnbc.com/plus.
Discover your new Hyundai right now at Hiley Hyundai of Burleson. Come lease a 2025 Hyundai Elantra for $187 per month for 24 months. Or check out the 2025 Hyundai Santa Fe. Lease for $201 per month for 24 months. Or lease a 2025 Hyundai Tucson Hybrid for $336 per month for 36 months. And experience America's best warranty with Hyundai Owner Assurance. Visit Hiley Hyundai of Burleson today.
Good friends go on road trips. Great friends feed you McDonald's fries.
Action.
Applebee's 2 for $25.
Zoom in.
Get 1 appetizer and 2 entrees like the new chicken parmesan fettuccine.
Choose 1 appetizer and 2 entrees. Applebee's iconic 2 for $25.
Sorry, were we in that shot?
Welcome back to Squawk-Box. A bipartisan bill is being floated on Capitol Hill that would incentivize companies to distribute at least 5% of their stock to the lowest paid 80% of their employees. Joining us right now is New York Democratic Congressman Tom Suozzi. He is one of the co-authors of the Share Plan Act. Good morning to you.
Good morning.
It's an interesting concept. It's a provocative idea. Explain how it would work in practice.
It's a big idea. And the idea is that if companies with more than 500 employees share 5% of their stock with their lowest 80% wage earners, they'll get a 3% corporate tax rate discount. So they're only going to do it if it makes sense to them economically. It'll result in some initial dilution of their share price probably, but once they get the tax rate discount, it'll result in
But let's just go backwards for a second. So the first component part of this is some of these companies may have to buy back shares because they're going to need to actually capture the shares
or issue shares
to be able to distribute shares. So they're either going to dilute themselves or have to buy back shares to do this. So there's a genuine cost. You're saying you're offsetting the cost by
giving
reducing
a corporate tax rate discount of 3%.
3 percentage points.
3 percentage points. So the bottom line is...
It lasts for how long?
Order filled.
It lasts forever. The bottom line is...
One-time hit and you get a long time.
The bottom line is that right now in America, the top 10% wealthy people in the country own 93% of the stock. The lowest 50% people in the United States own 1% of the stock. We have to rebuild the middle class. We've made enormous wealth in America since the 1980s, and that's good, and we should encourage that. But we need to share our success with the people who go to work every day.
But I just want to go back. I just want to go back and do some math.
Yeah, okay.
For the CEOs
Order
who
filled.
would effectively have to follow this or make this decision to do this or not to capture the tax rate, the math is what? So their current corporate tax rate is going to be 21%?
Yeah.
Okay.
So
Order filled.
You're down to 18%. If you
Order
put this in
submitted.
place for your employees permanently, I mean, so
Order
what happens if I
canceled.
do this on a one-time-
What if I lose employees,
Order
they
submitted.
take off and now my 80%?
The employees, you could decide whether or not you want the stock to vest over a 5-year period or not. We think this will encourage worker productivity. It'll encourage worker loyalty. It will make more people in America owners. We want
but do I have to continue to do this? Like if I have employees who leave and now I'm no longer compliant with 80%.
As long as 5% of your stock is owned by your employees, you comply.
But if I lose the employees, then I have to keep issuing more stock to make sure that that number continues.
And I'm assuming what you say 5% of your employees, if the CEO...
Not 5% of your employees. 80%. Lowest 80% of
Lowest 80% of your employees have to own 5% of the company at any given time.
Correct.
Okay, so this becomes interesting / complicated if you're a company like NVIDIA. The cost of this is actually astronomical.
So in the case of NVIDIA and other companies with high market value like that, you can cap the award to $250,000. Now, the average award to your employees will be like $50,000 or $60,000. This will the bottom line is we need to rebuild the middle class.
Look, I understand the policy. I'm just trying to figure out how we can make the policy work. My next question, work so people actually want to do it and that there's an incentive to do it and that it works out. You're saying right now this is just for public companies?
No, it's for any companies with over 500 employees. It would mainly be public companies because of the stock, but there could be ways for this to work for.
Well, that's where I was going to go, because one of the things that we're seeing a huge trend, and we talk about on the broadcast all the time, is more and more companies are staying private for longer. The real actual money that's being made is actually while the companies are being private before they become public. And so the question is, how do you incentivize those companies to do what you're talking about?
Yeah, I think that the idea is we have to figure out, this will go through a lot of iterations, I'm sure. Right now, I have bipartisan support, 5 Democrats, 5 Republicans, including the chair and the ranking member of the subcommittee on tax in Ways and Means.
Right.
And there'll be a lot of debate about how to tweak this to make it work the right way. The bottom line is that in America, we need to start rewarding people who work hard, because there's too many people in our country that are working hard every day and they just can't get ahead. And we need to create more of an ownership society. Right now, the people watching your show, the people that pay attention to the Dow Jones, is a relatively small segment of the American people. We need to expand the ownership society in our country so that people who go to work every day can participate in the great success of this great country.
I don't understand all the details, but I see what you're saying from a broader scale and a position on this. And you see the politics of inequality playing out, not just here in New York City, but across the country. But we have focused on this Mamdani election that's coming up as a result. I know you wrote an op-ed in the Wall Street Journal kind of knocking it down. You're a Democrat who sees things a little differently, but this really plays at the schism in the Democratic Party at this point.
Right. I want to make it very clear. I'm a Democratic capitalist, not a Democratic socialist. And what Mamdani did in New York, much like what Donald Trump did, is tap into the economic discontent of people in the country. Too many people go to work every day and they can't make it. And in our country, we've got to get back to a place where whether you're a left-wing progressive or a right-wing conservative, everybody should believe that in return for working hard, I'll make enough money so I can buy a house, educate my kids, pay for health insurance, and retire without being scared. That's the American dream. Everybody in our country should believe that. Whether you're a progressive or a conservative, you should believe that.
The way to get there is very different. I think a lot of people believe that, would buy into that and say that absolutely. But even within your own party and within Congress writ large, it's really hard to figure out agreement on how that happens.
So that's why a bill like what I have right now, which is a bipartisan bill, let's get Democrats and Republicans to stop attacking each other and start attacking the problems that we face in our country. And the problem that we have is that too many people are working hard and can't make it.
But you find that you have more agreement with moderate Republicans than you do the left wing of your own party.
I have agreement with all kinds of people as long as you look at let's diagnose the problem. The problem is that too many people are working hard and can't make it.
Sure, but Mamdani has said this too. His way of going about it is going to be
I totally disagree with Mamdani. I mean, he's smart, he's charismatic, he's wrong. I disagree with him. We can't raise taxes in New York City. People are leaving New York City as it is. And in blue states and cities throughout the country, our taxes are too high. We're losing population. The 2030 census, we're going to see less Democratic congressional seats, less Democratic electoral votes throughout the country. The blue wall will no longer exist because people are moving to low-tax states like Florida and Texas and Tennessee and other states. Now, I disagree with their policies, but we have to figure out how to make it attractive.
When we bring people in here to talk about New York City and whether they're losing population or not, they'll say, no, we're back. It's not as bad as it was 2019. But you brought up a really interesting fact about population since the 60s.
Yeah, when I was born in 1962, I'm 62 years old, be 63 later this year, there were 45 members of Congress from New York State. Today, there's 26 members of Congress from New York State, and it's going to go down in the next census unless we figure out how to reverse this trend. Because since we lost the state and a local tax deduction, which is a body blow to New York and other high-tax states, we're continuing to lose population from places like New York, New Jersey, Illinois.
Relative to what you see the population growth in other parts of the country, which is how Congress is based on those.
Correct. Right? And the electoral votes as well.
Tom, I'm getting a whole bunch of texts and emails about your plan. I want to just go back to the math, because this is actually an interesting thing, and maybe you can respond to it. I think it's important, given that we just talked about it. If you look at these, the two examples, Amazon and Walmart. Now, obviously, these are two big companies, but the cost to them, 5% of their market cap is basically, 5% of Amazon's market cap is basically $100 billion. Walmart would be $26 billion. The tax break to them for something like Amazon would be close to $1 billion a year. So if you have $100 billion you got to give away to the employees, and the only benefit to you economically is $1 billion in year one. Let's say and let's say you amortize that over 20 years. You're still $80 billion in the hole.
So
if you did Amazon. If you do Walmart, by the way, the situation's not materially better. It's $26 billion is what the market cap, 5% of their market cap would be, and on an annual basis, they might save $900 million from this tax break if it works. And so even if you amortize this out, it would take you 100 years to pay for this.
So companies with high market caps can cap their award at $250,000 as opposed to giving the full 5%. They'd have to decide. First of all, this is not a mandate. This would be a decision that companies
can make on their own.
Whether it makes sense for them economically to do it. I believe that companies will decide to do this because it will encourage employee loyalty and productivity as well, and because
But it is subsidized by the taxpayer, as any tax incentive.
It's subsidized really more by the existing stockholders because you'll see dilution of their shares in the beginning.
Yeah, but they lower tax.
All I'm saying is I think the companies that you want to be doing this are actually not even the big tech companies. You actually want the Walmarts and you want the factory worker at Amazon who's delivering your package, and the folks at Walmart, they're the ones you want getting the stock.
Yeah.
And so the question is, how do you make this an economically feasible proposition to the company? And I think that's a very hard thing to do with this.
And that type of conversation and that type of provocation to get people thinking about this is what the big part of this goal is.
Tom, can I just throw in one other potential unintended consequence? You are making an incentive to put a lot more robots into place and to automate things so that you don't have as many.
Well, we're going to be seeing a lot more robots, and we're going to be seeing a lot more AI, and we need to create more of an ownership society so that people can participate in economic success of our country. Right now, we have a very.
I'm okay with that because it's just not going to. If it's optional for a company, then they're not going to do.
The whole thing is optional,
robots.
and the idea. And let's figure out more ways to make the middle class rebuild in America. Let's figure out for people aspiring to the middle class and in the middle class that they can have a decent life, that they can participate in our great success. When we went through this whole thing with Milton Friedman in the 1970s and said, stop worrying about the employees, stop worrying about the community you're in, and just worry about the shareholders. It created enormous wealth in our country, but we decimated the middle class in the process. We have to rebuild the middle class in our country. This is an idea to try and get there, and I hope it will provoke a lot of ideas and a lot more text to you.
I like the provocation. Thank you. Appreciate it. We have some news to tell you about. The Fed just putting out a statement about President Trump's visit yesterday, and Steve Leisman has the details. Also provocative. Good morning. Steve, we are afraid to say that we cannot hear you. We're having a little bit of a technical snafu, but you're going to want to hear what Steve has to say, and we're going to bring it to you right after this very short break.
The future
Order
is here.
filled.
Robots, automation, and AI. Integrating these technologies into your supply chain is complicated and expensive, and usually doesn't work. That's where DHL comes in. We have been implementing these technologies since before it was cool, tested and perfected across the world's largest contract logistics network. At DHL, it's people, technology, and analytics working together to take your supply chain to the next level. The future is now. DHL Supply Chain.
Every dog is unique. That's why at the Farmer's Dog, we put your dog at the center of everything we do, with food that's freshly made, packed with nutrients, and pre-portioned. We're making it easy for you to take care of your buddy.
Out here, there's always plenty of loyal followers. And whether it's your first new chicks or a farm full, we've got all the supplies and know-how you'll need.
Welcome to Tractor Supply and to life out here.
Oh, I wish my TV provider let me choose what I pay for.
Sling lets you do that.
I wish my TV provider let me pause my subscription when I want.
Sling lets you do that, Clock Boy.
And I wish my TV provider gave me hundreds of free channels when I pause.
Sling lets you do that too.
Choose and customize your channel lineup or pause and watch for free. Sling lets you do that. Base package required.
What if you could invest in a future where skin cancer treatment is non-invasive and relatively painless?
Medicus Pharma's groundbreaking solution delivers chemotherapy directly to the tumor site, offering a mostly painless alternative to invasive surgeries. With the skin cancer treatment market expected to exceed $20 billion by 2030, Medicus is poised to meet the demand for cost-effective, non-surgical options. Now advancing Phase 2 studies. Medicus Pharma, leading the charge in skin cancer innovation.
I never thought this would happen.
When disaster takes control of your life,
We got you.
get it back with a single call to the team that shows up fast to make things right. ServPro, like it never even happened.
Start streaming. Go to cnbc.com/plus now.
What job do you think is more important? Would it be Treasury Secretary or Chairman of the Federal Reserve?
Becky, I think you're asking which is more important for me to do?
I am.
Let me ask how much power/influence the chair ultimately has.
What the Fed needs is less groupthink. You get something in your email box or something, just call us back.
After the president, Joe, you'll be my second call.
That's not bad.
Squawk Box, weekdays 6 a.m. Eastern and streaming on CNBC Plus.
Fed just putting out a statement about President Trump's visit yesterday. We got cut off unceremoniously by the technology gods, but Steve Leisman is now here and he's got the details. Steve?
Yeah, apologies for the technical glitch there. Andrew, the Fed saying it was honored to welcome the president yesterday. They appreciated the opportunity to share the progress on the building with the president and the other dignitaries he was with. They're grateful for the president's encouragement to finish the building, and they promised to be careful stewards of the nation's resources. And this is interesting, Andrew, because it comes after this provocative move by the president to go over there, which seemed like it was kind of
Order
set
submitted.
up to raise the temperature. And it feels a little bit like the temperature's a little lower as a result of it. The president seemed a little mollified either by what he saw or what he heard. And so and people say that the chair defended himself well against some inaccuracies by the president. And it looks like people are saying that Powell is here to stay, at least through the end of his term in May.
Okay,
There it
Steve,
is.
thank you very much, Steve Leisman. In the meantime, shares of Chipotle saw their worst day in years after the chain announced lower than expected in-store traffic for a second quarter in a
Order
row.
canceled.
In the Cameron Mitchell Restaurant Group, a difference between lower and higher priced restaurant sales could also point to a more cautious consumer. And joining us right now to talk more about it is Cameron Mitchell himself of Cameron Mitchell Restaurants. He's the founder and CEO, and we check in with him frequently on this stuff. Cameron, let's talk a little bit about how the consumer looks from your perspective.
Well, good morning, Becky. First of all, it's a pleasure to be with you this morning. I would say the consumer is getting to the end of their rope. I think they have almost, they're still spending. We're still getting traffic. And actually, we're seeing the first increase in same-store sales we've had in 2 years, starting last month and the month before and heading into this month. So cautiously optimistic. But as far as price goes, we know we're at the top end of our ability to take price in the market. And I'm concerned we were not going to raise prices the second half of this year. And with meat prices jumping the way they have, it's a significant impact on our P&L. I'm not sure we're going to be able to hold our pricing here in the second half of the year. We'll see how that works out.
How do things shape up from back in the pandemic days when we used to talk to you when you had to close everything down, then you saw higher wages, then you saw all of the constraints with inflation that came through because of supply chain issues? How does that time frame manage to compare to what you're seeing right now?
Well, obviously working through COVID and the after effects of COVID was tremendously difficult. But I would tell you that, in mid-23, as sales started to fall, as the COVID effect started to wear off, up until today, these past 2 years, in my 45 years in the restaurant business, have been very difficult to maintain profitability. We were down in profit last year, and the second half of 23. First half of this year, we're down in profit. It has taken, everything we have in the tank basically to combat the increased costs that we're being faced with via labor, food, anything else that we buy, construction materials, interest rates, to maintain. I'm very sensitive to the independent restaurants out there that don't have the resources that we may have as a larger company to combat some of these issues. And we're seeing a lot of closures out there today as a result in the restaurant business. But the good thing on labor, I will tell you, is turnover is an all-time low. People are staying, they're not moving, they're staying put and spending more time with the company. So that's good news. But it's just challenging out there right now the consumer is starting to spend a little bit less. They might be ordering less desserts or less appetizers, et cetera. So it's not one thing, it's another. And I'm very optimistic, though, hopefully the consumer can hold out here as we're starting to see here these past couple of months, and the first glimmer of hope with same-store sales increases.
Okay. Cameron, thank you. Cameron Mitchell, we appreciate it.
Thank you, Becky.
Okay, we've got June durable goods orders on tap right now. I want to get straight over to Rick Santelli. He is standing by at the CME in Chicago with the numbers, sir.
Yes, these are preliminary, June. Andrew, durable good come in at minus 9.3%. That's a little bit less negative than we were expecting. We were expecting a number closer to minus 11%. And in the rearview mirror, positive 16.4 becomes 16.5. Before we go any